Hello traders and welcome to another video review. Today is Tuesday, March 10th, 2026. Let's take a look at the economic calendar for today. So what do we have here? Japanese data, the most important data of the Asian session. GDP in Japan up from minus 0.6 to 0.3. Household spending down from minus 2.2 to minus 2.5%. GDP annualized up from minus 2.3 to 1.3%. NAB business confidence data in Australia down to minus 1 from 4. Building approvals improve a little bit from minus 14.9 to minus 7.2. Chinese data, imports beats the expectations, exports beats the expectations, trade balance beats the expectations. So pretty good bunch of data from China. German trade balance up from 17.5 billion euro to 21.5 billion euro. Now the data from the US at 15, this is 3 o'clock. Existing home sales is scheduled for release. At 5 o'clock, AAA short-term energy outlook is scheduled for release. Then at 6 o'clock we got 3-year note auction. And at 9:30 we got API weekly crude oil stock data release. So not really very busy US session. Nevertheless, two very important data releases are still scheduled. So without any further ado, let's switch to the charts and we start as usual with euro dollar. Euro dollar for our time frame chart is looking for improvement. The local high 1.1651 is basically quite close to 1.1670, so less than 20 pips towards the next technical resistance. Momentum is improving right now, 55 points, so we broke above the level of 50 and the bulls are in charge of the market. So despite of the little breakout below the technical support, the outlook remains bullish for the euro dollar, as it is actually improving a little bit, doing the pullback to the upside, and after this long down switch has been possibly completed. Cable broke above the trend line. Cable broke above the trend line. I don't want to move it, but you can see that we tested the 1.3436, big momentum improvement, 61 points right now. So we are testing the 100 periods moving average, 1.3462, and we are looking for a movement up towards 1.55, 35.31. So room to the upside on the momentum, room to the upside on the chart, bullish breakout on cable. US dollar versus the Japanese yen made a local high at 158.91, just around 60 pips shy of the next very important technical resistance and swing high. So right now the situation is quite different. We hit extremely overbought conditions and then we broke below the level of 50 to go as well as 40, as low as 43 points. So momentum is now negative. We are testing the last local technical support, 157.37. Any breakout lower is expected, and breakout lower would give us 156.47 or even the 100 periods moving average on 4-hour time frame chart. So this nice beautiful journey looks like it is completed, and now we are witnessing breaking of our technical supports and the weakness of the euro dollar versus the Japanese yen. Gold doesn't do anything, 5,177 inside of a narrow range. It's been like this since the beginning of the last week. So as you can see, we are just hovering around the moving average 5,117. So the situation here is stable on gold for now. SP500 covers the yesterday's gap and moves back above the technical resistance. So right now we are back with the technical support, and the situation here is still very bullish, as the breakout to the downside has been unconfirmed. Gap is closed. Now we are trading around 6,812, very close to the 6,840, which is 100 periods moving average. So we back in the game. We are back inside the range. Crude oil, wild things are going on the crude oil. Look at this. daily candle looks like a this is the biggest daily candle in record I got on this chart since 2026. I can even switch back to the weekly. You can see this volatility on the crude oil is the biggest since, let me just compare. There is the big low. This is COVID low 2020. This is COVID high 2022, March 2022, and that's about it. I can't see in the last 6 years any candle bigger than this red candle and bigger than this green candle. Weird times we are living in. Very, very big volatility, big breakout above the trend line. I've been talking about this last time. If we break above this trend line, the movement can be big, and we went as high as 120, exactly 119.42, into the extremely overpriced and overbought conditions that has not been seen in years. Yet again, it has not been seen in years. So right now, if we switch from weekly to daily, you can see wild volatility on this market. And for 4-hour time frame chart, if we just look at how small are these candles, compared to what's happened yesterday. Because yesterday on Monday we opened after the weekend, we hit 192 and the daily low was 81, so we dropped $40, almost $40 per barrel. If we stick the price range tool here, so from this is yesterday's candle, from yesterday minus 32 points, yesterday high, yesterday low, minus 32% is crude oil for the current month. This is big swing, big swing, and it looks like the best once more, because we're coming from the extremely overbought conditions now towards the level of 50. So neutral level is right now being tested. What will come next? Very big bearish pressure, very big weekly red candle. It looks like bears are waking up. Let's wait and see what will happen. Bitcoin keeps going up. We tested the technical support we spoke about last time, 66,161. Nice bullish engulfing pattern, and we going higher. Momentum strong, 63. Still room to the upside. Maybe, just maybe, we will go back above the level of $73,000 or $74,000. Yet again, we are now trading around $70,400. Big nice improvement in sentiment. Big nice improvement in intraday sentiment, obviously. Nice movement to the upside. We are still inside of this range. The last attempt of a breakout didn't actually work, but if we look at this, if we touch and break above 70, roughly around $75,000, the next target is above 80,000. So that's a nice $5,000 gap. Maybe, just maybe, bulls will do something about it, or maybe not. Maybe that will be another failure, another short-term breakout, and then go back to the middle of the range. We will see how this will develop during the next few hours, maybe the next few days, maybe the end of the week. Remember, this week is the middle of the March, so when we finish this week, there's only 2 weeks left for the close of the first quarter. So that might be quite interesting situation here. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.